And welcome everyone once again. It's Marcel here. Welcome in this, I almost said backtesting session. This won't be a backtesting session. It will be an analyzing session where I will just analyze the market and tell you the possible scenarios that could happen on next week. And I thought that I will host this session instead of a backtesting session because price action nowadays is pretty tricky. It's pretty tricky and hard to follow. And I just like to give you a higher time frame perspective about what can happen in the future, and not just higher time frame, but the lower time frame. So from the weekly to the daily to the 4 hour, down to the 1 minute even. So I just want to give you a perspective about what can happen in the overall chart and how does Euro USD look like now. And yeah, I believe it will be much more helpful than the backtesting session because a lot of things has happened. A lot of things have happened in the past days and the past weeks, which is hard to follow. And hopefully after this session, you'll be able to understand what can happen on chart and what can you expect from price on next week. So yeah, this will be an analyzing session. And at the end of the session, I will just do a Q&A. So you'll be able to ask your questions after the analyzing part. And you'll be able to ask questions about psychology, about technical analysis, about everything that you like to ask. So, okay, let's just begin, guys. First, we will just hop on the forexfactory.com and check the upcoming news for the upcoming week. So next week will be starting from 15th of July, ending in 31st of July. So let's just check the upcoming week. And sorry, not this, Monday. So tomorrow, there won't be any high impact news coming. As you can see on Monday, there aren't any high impact news coming. So it will be a pretty easily tradable day. On Tuesday, as you can see, there will be a high impact news at this will be 4 p.m. So 2 hours after New York Open. So two hours after New York Open, there will be a high impact news. So at this region, we have to be careful. We can't trade news. We can't trade high impact news. But basically, we will skip trading after this news will be released. So on Tuesday, we will trade until 4 p.m. So we will trade 2 hours on that session, in that session only. On Wednesday, as you can see, we're going to have lots of high impact news, but these aren't affecting the, actually these are affecting, sorry, I believe this is the New York start, but I will check it, and I will advise you. On Thursday, we're going to have no high impact news, as you can see, and on Friday, we're going to have the NFP. So on Friday, we are having NFP, but this isn't a week. What the hell am I just checking at? Here's the week. Sorry, guys. So here's the Thursday. Yeah. So on Thursday, we're going to have one more high impact news, and this will be released 30 minutes after New York opens. On Friday, we're going to have one more high impact news, and this will be released 30 minutes after New York opens. So more likely on Thursday and Friday, we won't be able to trade in the first 30 minutes of New York. So in Thursday and on Friday, we are not trading the first 30 minutes of New York. After these high impact news will be released, we'll be able to trade. These are the upcoming high impact news for the week. Just keep this in mind. And always check the high impact news when you're trading, and always check the high impact news before the session starts. So let's just jump on the charts and take a look at the higher time frame. So basically, we'll start off from the weekly chart, and I will just zoom out a bit. What can we see on the weekly chart? Let me just zoom out. This will be enough. This region is enough. We can see that the weekly chart in itself is extremely bearish, right? So the weekly chart is following the exact same pattern that has the 4 hour time frame, for example. So starting from what was this? 2008. Starting from 2008, price is just creating a bearish structure. So from 2008, this high point, price is just creating this huge bearish structure by creating high impact news, high movement, high volume movements to the downside, pullbacks to some supply areas, new breakout structures to the downside with high volume movements, new pullbacks to some supply areas, new breakout structures, which wasn't the breakout structure in this case. The breakout structure has happened from this movement. So new high volume movements to the downside, new breakout structure right here, new pullback to the supply area right here, the decisional supply area. After this movement couldn't break below this last recent low point and created a pullback, which wasn't strong enough to break above the last recent weak high point. And after this, price just broke structure to the downside again, here, as you can see. So basically, the weekly chart is following an extremely bearish pattern, right? So by simply just analyzing the technical part, so we don't really care about the fundamentals. We don't care about the fundamentals because it's all about technical analysis. So As you can see, I will just focus on this region. As you can see, price has just printed this high point right here, which was strong enough to break below the last recent low point. This is the last recent low point because this couldn't break structure to the downside, as you remember. So this high point broke structure here to the downside, meaning this will be a new strong high point. This break of structure puts this high into a new strong high position. And after this, price has just created this low point here. This low point, we will consider this as a whole low point. So this won't be another low point, and this won't be another low point. This will be just a one whole low point. So this is the low point at this case. Price has just created a pullback starting from this low point, and this low point wasn't strong enough to break above the last recent high point at this region. It just reacted on a decision on a supply zone here. Okay, the supply reaction wasn't strong enough to break below the last recent weak low point. So just map the structure. This was a strong high point, right? This was a weak point because it reacted on a decisional supply and couldn't break even above the decisional, not to speak about the strong high point. So this will be weak. This low is weak. After this, price just reacted on the supply. It couldn't break below the last recent weak low point. So this was the last recent weak low point, and this supply reaction on this region wasn't strong enough to break below this low point. Okay, this puts this high into new weak position. So we have a strong high, we have a weak low, we have a weak high. Basically, everything that happened between this high point and between this low point is substructure. The exact same concept goes on for the higher time frame. Sorry, let me just hide the video panel. Okay, so the exact same concept goes on for the higher time frame as it goes for the lower time frame. On the 15-minute chart, we also have these substructural movements, right? If there's a high point, there's a low point. It doesn't matter the time frame. I'm not talking about a high time frame specific content. This goes on for every single time frame. So if there's a high point, let me just draw a clean chart. If there's a high point and if there's a low point, this will be the high point, this will remain the high point, and this will remain the low point, unless the high breaks with a weak break, because this will be a change of character to the upside. So on the upside, change of character weeks are enough. And on the downside, we need a body break, right? So if price breaks below this low point with body closure, then that will be a break of structure to the downside. Unless these movements happen. So if price ranges between this high point and low point, this will be just a substructure. And this will be more likely liquidity built up for the upcoming longs or shorts, and after the movement have been decided. So everything that happens between a high point and a low point, or vice versa, between a low point and high point in a bullish trend, of course, will be just substructure. So this is a substructure, and this could have been considered as substructure. As you can see, it has just built up liquidity perfectly on both sides. So there's liquidity on the downside. I mean, there was liquidity on the downside because this was the bottom, this was the bottom, this was the bottom. Triple bottoms in the form of a weak low, triple bottoms, and on the upside, we can identify this trendline liquidity. First touch, second touch, third touch, trendline liquidity, as you can see. So basically on the weekly chart, we can see a range is being formed, and the range low has been swept with this movement. This is what we know about the higher time frame, the weekly chart. But let me just zoom in a bit. And you'll see that price has just broke below this last recent weak low point. And if a weak low point breaks in a bearish structure, this will be a question. If you'd like to answer, raise your hand. So if a weak low point breaks in a bearish structure, what will it cause? What will be formed after the weak low point break? After this weak low point is being broken, what will be formed? Broadly, please.
We got a new supply, weekly supply.
Yeah, but I was asking about the structural perspective.
Break of structure inefficiency.
Just focus on these ladders. You know, strong high, weak high, weak low.
Strong low, and you strong low.
No.
Strong high.
Yeah, strong high. That's what I was looking for. So after the break of this weak low point right here, in a bearish structure, of course, price will form a new strong high. So this weak low break right here, this weak low break of structure here, put a new strong high into the market. This low point break did put this new strong high into the market. So on the monthly and the weekly chart, we have a new strong high. This won't be a strong high anymore. This will be just a simple structural high. Okay, so our last recent strong high is this one right here. At this point on the monthly chart, I believe it will be a clean high point. Yeah, on the monthly chart, it's a really clean high point. So this break of structure to the downside did give us a new strong high point. Okay, let me just remove these drawings and focus on this region. We are still on the weekly chart. On the weekly chart, in order to change this trend, we need to see the break of this high point. but this high point is really, really, really far away, right? So what can we do in this scenario? Because if we are waiting for the break of this high point, literally this will be years. We have to wait years for the break of this high point, or even month. So what can we do in this scenario? We can just simply drop on the lower time frame, so on the daily and the 4 hour, and wait for the break of some initial low point right here, or high point, sorry, which will cause a change in the trend on the lower time frames, for example, on the 4 hour chart. And if the change has been if the trend has been changed, sorry, so if the trend has been changed on the lower time frame, for example, on the daily chart and the 4 hour chart, we can expect the continuation of that changed trend. Sorry, I can't speak. So we can expect the continuation of that changed trend to the upside until price changes character here on this weekly high point, or at least reacts on this high point and puts a new low into the structural. Because this is how the structure works currently. As I showed you at the beginning of this session, price is moving in this downtrend, right? So creating breakout structures, pullbacks, breakout structures, pullbacks, breakout structures, pullback, breakout structure, pullback. This is how the structure works. And we have just a new breakout structure to the downside, and we could see a new rejection level point because price has just rejected on this area. And this could be our new rejection level point, which can change the trend to the upside, and the new pullback could be formed. And if a new pullback forms, we'll have several areas where we can expect a continuation. But mainly I will be expecting a continuation on this strong high area. Why? Simply because just taking a look at the structure. Basically, price is just always coming back to a strong high, right? As you can see, these are huge pullbacks. This is a huge pullback to the upside. This is a huge pullback to the upside, reacting on strong high, reacting on strong high, reacting on strong high. This wasn't reacting on strong high, but this was reacting on this high point. So basically, out of 7 pullbacks, 6 are reacting on the strong highs. So if price can actually change character on the daily chart and 4 hour chart right here at this region and start to form a bullish pressure to the upside, we'll be able to see the mitigation of this high point right here. And if the mitigation of this high point happens, this will be an half a year or a year. Let me just check. Between the high point here, this was at November 2009, and this was in 11. So between the high point of this strong high and between the pullback right here, 2 years have been passed by. So there's a chance, there's a high chance that we'll see a pullback of the weekly chart, which will last for 1 or 2 years, and that pullback will be bullish. That pullback will be bullish, and we'll be able to trade the bullish structure to the upside. And this pullback can last for 2 or 3 years. This is the power of the higher time frame. If this higher time frame is creating a pullback, which has a high chance, then we'll be able to trade longs, because as soon as the higher time frame creates a pullback, the 4 hour trend will be changed to bullish. And if the 4 hour trend is bullish, we'll be able to execute longs after this strong higher supply zone. But this is really, really far away. I just showed you the perspective on the weekly chart, and I just show you what can we expect on the real long term. This is the long term lookout. This is what can expect on the long term. And as you remember, I hosted weekly lookouts 3 or 2 times before. And in those weekly lookouts, I just told you that this low will be broken, and price was somewhere around, let me just find, somewhere around this region or this region. And I just told you that this low point will be break and we'll see a new breakout structure. This has happened. A year has been passed by because I told you this a year ago. A year has been passed by and this has happened. And we have still a chance to see the pullback right here to the upside. And I will replay this video in 2 years when a pullback happens. But of course, this is just a huge prediction. But this is how the structure works. This is what you can see on the higher time frame. And this is what price is doing currently, because it's here. It's simple, clean, and easy to read. As you can see, it's creating a clear bearish structure with breakout structures and pullbacks to the upside. So at least that's what we can expect on the higher time frame perspective. Okay, but that's enough about the weekly chart. I just pull it right here. Okay, that's enough about the weekly chart. Let me just switch to the daily chart. So as you remember, guys, we had a nice weekly demand reaction right here at this region. And before that weekly demand reaction, we just swept liquidity into this demand zone on the 1000 level. I will show you this on the 4 hour chart. But as you can see, I will ask you, this will be a question. If you like the answer, raise your hand. So the question is, what can we see on this chart? What can we see at this region? I want you to mark something on this region. I want you to mark something. I won't tell you that's something. You have to figure it out. Mark me something on this region. If you raise your hand, Raise your hand if you like to draw. Raise your hand. Raise your hand. Don't draw on my screen. Just raise your hand. Fedo, please. Thank you. Perfect. Thank you. That's what I was meaning. That's what I said 5 minutes earlier. If the daily chart changes character to the upside, then we'll have a high chance to see the continuation of the bullish trend. Why? Because this is a weekly demand zone down here. This was a weekly demand tap from 2002. This demand zone has been formed in 2002. This demand has been tapped and price has changed character on the daily chart. And as I said, every time frame is correlated. Every time frame is fractal. Every time frame has its pair, which confirms that time frame. So let's just go through the confirmation time frames once more. Starting from the weekly chart, because we are talking about the higher time frame perspective. So we have a weekly zone. Oh my God, this is just messy. So right here. So we have a weekly zone. This weekly zone can be confirmed on the daily chart. So the weekly demand zone and supply zones are being confirmed on the daily chart. If price steps into a weekly zone, the daily chart, a change of character or break will be the confirmation of this weekly zone. The daily chart will be confirmed by the 4-hour zone. So if there's a daily demand mitigation / supply mitigation, it can be confirmed by a 4-hour change of character or a 4-hour structure break. 4-hour can be confirmed. I'm asking you by what? If you raise your hand, you can draw on my screen. Let me just check. It was Michael, please. Thank you. Exactly. The 4-hour chart can be confirmed by the 50-minute. So if there's a 4-hour zone, supply or demand zone, doesn't matter. It can be confirmed by a 50-minute change of character. That's exactly right. The 50-minute, oh my God, this is so ugly. This is ugly too. This is ugly, but never mind. So the 50-minute can be confirmed by what? If you raise your hand, you can answer this question. Lepu. Lepu, please. I don't know how to say your name.
It is Lepu.
Lepu, okay, sorry. So
it's okay. 1 minute.
1 minute, exactly. Thank you. So the 50-minute time frame can be confirmed by the 1-minute chart. And these are the fractal confirmation time frames. Every time frame has its pair. Every time frame has a pair which confirms that exact time frame. And once again, weekly can be confirmed by the daily, daily by the 4-hour, 4-hour by the 15, 15 by the 1 minute. And why did I draw this? Why did I draw this on my screen? Just because I told you that if price steps into a daily zone, a weekly zone, that weekly zone can be confirmed by the daily chart. And if there's a change of character on the daily chart after that weekly demand mitigation, there will be a change in the trend, and that zone will be confirmed. Okay, so starting from this, we will have a fractal confirmation, right? Because the weekly has been changed. The weekly is okay. The weekly zone has been confirmed. There will be a daily zone somewhere around here, which has started the character changing movement. If the daily is being confirmed, daily will be confirmed. And after that daily is being confirmed, there will be, of course, a 4-hour change of character to the upside. This will form, and this will lead to a 4-hour zone formation, 4-hour demand formation. If this 4-hour zone is being confirmed on the 50-minute chart, then this will be a 4-hour confirmed zone. If this 50-minute zone, this new 50-minute zone will be confirmed by the 1-minute chart, then this 50-minute will be a confirmed zone, and the fractal confirmation in every single possible time frame will happen. And if all of this confirmation happens, then this will be the strongest trend changer, because every single time frame is confirmed to be bullish. If every single time frame is confirmed to be bullish, we can expect a really fucking huge pullback to the impulse of this movement, to the origin of this movement, which will be this one. So if every single time frame turns into bullish, we will have a really high chance to see a fucking huge pullback to the upside. And I believe this will happen. I'm actually positive about the pullback to the upside because it has to create a pullback. Prices just kept dropping and dropping and dropping. And that's why I said that we don't care about the economics and fundamentals. We just care about the technical analysis. We could say that, okay, there's actually a war going on and economic crisis and inflation and everything is going on. But we only care about the technical analysis. And the technical shows us this. This is what we can see on the technical side. So if the fractal confirmation happens, we're going to see a huge pullback to the upside and huge long movements to the upside. But Until this confirmation happens, lots of time will pass by and we'll be able to see lots of trades on the 1 minute chart because we are still on the daily chart. Comparing the daily to the 1 minute chart is just a huge difference. We will see lots of short trades. We will see lots of long trades on the daily, 1 minute chart, and we'll be able to execute lots of trades. So dropping to the 4 hour. Let me just, mark the change of character here. Change of character. Daily. Okay. Dropping to the 4 hour. So here was the change of character. Let me just adjust this because it hurts my OCD. And this one too. Perfect. So that was the daily change of character. After this daily change of character, prices just returned to a 4 hour zone. So basically, prices just created a change of character on the daily chart, and prices just reacted on a low point, a demand zone right here. But don't rush. Let me just analyze this price action region. So as I said, price was just creating a huge bearish pressure, right? Huge bearish pressure to the downside with huge inefficient movements over and over again. But we know what has happened. We know that price is just creating an insanely bearish pressure. But prices just kept dropping insanely at this region over and over again until it did hit the 1.00000 psychological level. So this was the 1.0000 level, which has a really strong psychological, basically support level. This is a really strong psychological support level where lots of retail traders are opening positions. And as you can see the footprint of the retail traders because they've opened positions here. They were just opening positions here, and the open positions caused this candle to the upside. After the second attempt, they opened more positions here, caused this pullback to the upside. More positions here. After all of their positions have been opened, prices just went down and collected all of their stop losses. After all of their stop losses have been collected, new buy orders can be placed in the market, right? That's why we are not trading retail. That's why we are trading smart money. That's why we are trading supply demand, because we are always aiming for the collection to collect the retail trader stop losses, and we are entering after the stop losses have been collected. That's why our main criteria is the liquidation. That's why you can see the liquidation in the counter trend and the pro trend trade too, because we have to see the liquidation. We have to see their stop losses are being collected. If these stop losses are being collected, there will be a free way up to the upside, because they open longs here. Every single long have been opened here. Why? Because they are impatient. Banks and simple algorithms will just sweep the stop losses to collect their money. They need money. They need money to open new orders. If there's no free orders left on the market, they have to make free orders. If their orders are being here open, they have to make these orders free. And after all of these orders are being freed, they can open and place the new orders right here at this zone. And yeah, you can see the result of this. All of these orders are being collected, and after this, prices just reverse to the upside immediately because algorithms and banks could have placed their orders right here after the retail traders have been swept out. And this caused a huge reversal to the upside, which was leading to a daily change of character. Okay, so after this, prices just formed this bullish structure to the upside and formed this last recent low point and high point here, as you can see. Prices just created this high point after rejecting. Let me just remove this. So after rejecting on this supply zone here. So prices just rejected on this supply, as you can see. Sorry guys, just a minute. Let me just turn the AC on because it's hot in here. Sorry guys, I just had to turn the AC on because it's literally so hot in my room. Okay, so where was I? The price just reacted on the supply zone recently, right? There was a rejection, as you can see, perfect rejection inside of the supply zone, and this rejection wasn't strong enough to actually break below the last recent demand zone, which has been formed here. But we talked about this region several times, but never mind. Let me just explain it once again. So here was a liquidity being formed. This liquidity has been swept into the supply zone with this movement. This is how structure works, like, right? So we have a bearish structure creating breakout structures to the downside over and over again. We have a liquidity, for example, below supply zone. We have another breakout structure here. This will change character to the upside, of course, here. This will be a change of character to the upside, but this could be also a liquidity sweep. If this supply can give us a reaction after a liquidity sweep and change the character to the downside again somewhere around here. Then that will be a liquidity sweep, and we can expect a continuation of the bearish trend. But if this sweep and this supply can change character, but it will react on the last recent zone, then we can expect the break of this supply zone. But we talked about this several times. But this is the situation right here. This is what we can see right here. Because as you can see, price is just reacting on this supply zone. After a reaction, it couldn't break below the last recent demand zone. This was the last recent demand zone, which has caused the sweep and the technically change of character to the upside. After this, price couldn't break below, but it has tapped this zone. It has swept liquidity into it, and after liquidity sweep, it just reacted strongly. As you can see, a strong reversal has happened from this zone. So technically, this means that this supply will be weak because this supply couldn't take out the last recent zone right here. So it means that this supply will be weak, and we can expect a break of this supply. And there's one more confluence next to the break of this supply. And I'm asking this, what is the other confluence next to the break of this supply? What is telling us that this supply will break? Fedor, please. Exactly, thank you. Perfect. Perfect answer. There's liquidity. There's perfect liquidity on the upside, as you can see, inside of this supply zone. First tap, second, third, fourth. 4 equal taps lined up inside of this supply zone. So there's a really high chance that this supply and this liquidity line will be swept. And this goes next to your plan, because before the plan on last week, as you remember. So price just reacted on this zone. After this zone reaction, what do we need? What do we have to see after this 4-hour zone reaction? This is one more question. What are we waiting for after the 4-hour zone tap? If you raise your hand, you can answer. What are we waiting for after? Miriam, please. Miriam? It was you. No, you don't like to answer? Oh, in the chat. Okay, sorry, I couldn't see. So yeah, in the chat. Never mind. 15-minute change of character. Exactly. We need a 15-minute change of character after the mitigation of a 4-hour zone. And more likely, it has happened because a 4-hour change of character has happened already here. So more likely, there was a 15-minute change of character on several places. So the fractal confirmation seems like it is being formed. Okay, but there's a danger about this demand zone, that there's liquidity below this demand zone. So there's still a chance that if price returns to this, for example, there will be a 15-minute origin of the change of character. So if price returns to this 15-minute character changing zone, there's a chance that this zone will be swept, this liquidity will be swept, and after a liquidity sweep, it can reverse to the upside and start the long order flow. But if it reacts on some sort of demand zone at this region, which is far away from this liquidity line, and if it reacts on this zone, then the trend can be continued. So let's just drop down to the 15-minute chart. Let's just drop down and let's see what is going on right here. So as you can see, we had an extreme supply zone here, which is part of the liquidity. This extreme supply zone has caused the loads of inefficiency, which has been caused by news. So this was news movement. We don't really care about this candle. We don't really care about this inefficiency because it has been already filled up with this candle. And yeah, this is just news movement, but still left the extreme supply zone right here, which is weak. This is weak because it couldn't break below this low point and couldn't break below this demand zone also. So this high point is weak and also part of the liquidity. So we can expect the break of this zone, and we can expect that this zone won't hold. Okay. So taking a look at the 15-minute chart, as you can see, price is just mitigated more than the 50% of this 4-hour zone. So it's a perfect mitigation for us, perfect 50% criteria mitigation. So we can't expect a deeper mitigation of this zone, but we can expect the sweep of the liquidity if price reverses down to the extreme of this movement. But there's, as I said, there's one more zone, or there's a decision zone where we can expect a reversal. So as you can see, here was a decisional 15-minute supply zone, which has caused this huge inefficient movement to the downside. And this zone has been flipped. And this zone has been flipped from this candle. Let me just put this in place. Here's this demand zone that has caused the break of this supply zone. Let me just remove these zones from here. So as you can see, price just reacted on this zone. This is a 15-minute zone. What do we need? What do we need to see after a 15-minute zone mitigation? This is one more question. You can answer if you raise your hand. Michael, please.
A 1-minute confirmation.
Thank you. Perfect. And as you can see, the fractal conformations are happening. Technically, the fractal conformations are happening. Why? Because the weekly demand zone has been confirmed down here. The daily conformation is missing, but basically the daily chart has changed character. But the daily zone has not been confirmed. So daily demand tap hasn't been tapped yet. But there was a 4-hour zone which has been tapped more than 50%. And after a more than 50% mitigation, price will just change character on the 15-minute chart. So the weekly and the 4-hour is being confirmed. After this, a price has stepped into a 15-minute zone, which has caused the 15-minute change of character. And more likely, the 15-minute zone is being confirmed too here on the 15-minute chart at this movement. So basically, it seems like the fractal conformations are happening. And as I said, everything shows the way to the upside. Every single sign is showing that it will continue the bullish movement because there's this huge fucking liquidity line. There was the daily change of character. There was a supply reaction which couldn't take the last recent demand out. There was a weekly demand reaction, swept liquidity into this demand zone. There was a change of character. There was a 4-hour reaction, 15-minute reaction, fractal confirmation. So every single sign is telling us that we can expect longs on the upcoming week, on next week. And that will be my plan. My bias is long. My bias is extremely long. I will be looking for long opportunities. But this zone can be easily swept. Anything can happen. There's a chance that this zone won't hold because there's liquidity below it. I will show it on the 5-minute chart. There's a chance that if price, for example, sweeps this liquidity and taps into this deeper demand region, this zone won't hold because there's liquidity below it. If price taps this zone, this extreme zone, there's a chance that this zone won't hold because there's liquidity below it. If all of this liquidity is being swept, and if this liquidity is being swept from below this 4-hour zone, that will be the last and final confirmation for me. If this liquidity is being swept, then, and of course, if price closes above this demand zone, so if this liquidity is being swept and price closes inside of this demand zone, that will be the final and strongest confirmation for me, because if this happens on next week, I will be just pressing the buy button and I'll be aiming for the weekly high point at this region, basically. This is my plan. If this liquidity is being swept and price can reverse after this liquidity sweep, I'll be just non-stoply pressing the buy button. That's all. Of course, we will have to look for good setups. Of course, we will have to look for good confirmation, good criteria setups. But if this happens, I'll be pressing the buy button without thinking. Okay, but let's just see the 15-minute chart. What can we expect? So we can expect several things. Price reacts on this demand zone. Price changes character on this demand zone, which has been happened. Price taps into this 1-minute demand zone, which has caused a change of character with good liquidity confirmation and continues the way up. Price won't respect this demand zone here. More likely this will happen in Asian session. So we won't see this in New York. More likely in New York session, this will be an already happened movement. So it will be just interesting to watch what has happened, because I will line up few scenarios. So second, price won't respect this 1-minute demand zone, sweep this demand zone, sweep this liquidity, but it will close inside of this demand zone and will reverse the upside and continue the way up. So this is the second scenario. So first, it will react on this 1-minute, continue the way up. Second, sweep the liquidity, reverse the upside, continue the way up. Third, tap into this zone, reverse on this one. This has a low probability. So if price sweeps this liquidity and taps into this zone, I believe this liquidity will be swept too. So sweeps this liquidity right here, but doesn't sweep the 4-hour liquidity. So just sweeps this simple liquidity, this 15-minute liquidity, and reverses. Fourth scenario, So fourth scenario, price sweeps the daily or 4-hour liquidity right here at this line, reverses, closes inside of this 4-hour zone, candle close inside of this zone, continuation to the upside. So these are the scenarios. Everything can happen. Every one of these scenarios could happen. But I believe the strongest scenarios will be if price reacts on this zone and sweeps the liquidity and continuation to the upside. And second strongest scenario, if price sweeps the 4-hour liquidity and continuation to the upside. I'm really not expecting short continuations. I'm really not expecting short trades, simply because I just explained why. I just explained that every single sign is showing us that this is bearish. This is bullish. Every single sign is showing us that this is fucking bullish. And we have to aim for long trades when we are seeing bullish pressure and bullish signs. That's it. We don't have to think about short trades when we are seeing all of these bullish signs. But if price breaks below this zone, I will send you the markups. So don't worry, guys. If price just simply changes bias from bullish to bearish, I will send you the markups, I will send you the updates, and you'll be updated about it. But currently, this is what we can see on charts. This is what the price is telling us. This is what we can see on every single time frame. So just drop down to the 5 minute and finish this analysis. As you can see, here's the mitigation of the refinement. No, the refinement has not been mitigated yet. So we can expect a deeper mitigation. We can expect a deeper mitigation of this 15-minute zone. And if the deeper mitigation happens, more likely the liquidity sweep will happen here too, because this low is part of the liquidity here too. So if a deeper mitigation happens, then we'll see the sweep of this liquidity. And after liquidity sweep, we can expect a reversal. This is the first plan. This is the first one that we are aiming for on next week. But more likely, this will already happen in Asian sessions. So I believe price will just can't basically decide this direction by tomorrow New York session. So if price breaks below this zone and the sweep won't be enough, it will leave a supply behind right here. And yeah, of course, we'll be able to take counter trend trades. We'll be able to take counter short trades to the downside. And by that time, there's still a chance that these short trades won't be just counter trend trades. It will be pro trend trades according to the 15-minute chart. But yeah, you can still take short trades down to the liquidity sweeping region because this will be a liquidity target. But there was no higher time frame supply mitigation at this region. Price did not mitigate the supply zone, as you can see, starting from this point. So this will just function at this liquidity. I'm still on the long side. I will just focus on the long scenarios, and I will focus on long trades, not short trades. And I'm still positive about that price will continue the way up on this demand zone, on some sort of demand zone. But if something different happens, if price just decides to go short, I will update you guys. I will update you and I will tell you how to execute shorts. Or if price, for example, sweeps the liquidity from below the zone until New York opens tomorrow, I will just send you the markups and what can you expect from these markups. So yeah, but basically, as I told you, I have a really bullish bias right now. I'm really looking for long opportunities because price has just changed character here on the 5-minute chart after mitigating this 15-minute zone. Of course, this is liquidity below this zone, and more likely this will be liquidity too, and more likely this liquidity will be swept. But after this liquidity sweep, I will expect continuation to the upside. That's all I can say about this chart. That's all I can say because I can't predict the future and I can't tell you what will happen. These are my expectations. Yeah, there's a demand zone, of course. You can expect a reaction on that demand zone, but you won't know. You won't know because this demand zone has been formed in lunchtime. This is a lunchtime zone. You won't know which will happen. I'm just showing you the perspectives. I'm just telling you my bias, what you can expect, and basically that's it. That's it. I won't drop. No. I won't drop down to the 1-minute chart because it's completely unnecessary. 1 minute is only for execution. We only execute the 1-minute time frame. We don't analyze on the 1-minute time frame. We analyze on the 15-minute, 5-minute, 4-hour. On the 1 minute, we just use it for confirmations to confirm that 5-minute/15-minute zone and confirm the trend. 1 minute isn't for analyzing the chart. Sorry, it was just a direct message. And yeah, somebody asked that, why don't you analyze the 1 minute? Because it's just an entry time frame. We analyze down to the 5-minute. So the 5-minute is the last time frame that we analyze. And basically on 1 minute, we will just look for entry opportunities according to the 5-minute time frame. But yeah, these are the expectations. I will just ask the question if it was clear. Was it all understandable and clear? Please just draw on my screen if it was or it wasn't. Perfect. Thank you. Okay, you can stop it now. Thank you, guys. So yeah, there's the supply zone also. We can still see a reaction on the supply zone, but this has less probability. But yeah, we can still see a reaction on the supply zone and continuation and liquidity sweep. Everything can happen. You can see anything. But right now, I'm just telling you the bias. Right now, I'm just telling you what you can see on the charts. And I won't aim for these supply trades. I won't aim for this supply. I won't care about this supply zone currently because my bias is just telling me that, hey, dude, it's just fucking bullish. Aim for long trades and don't waste your time with short trades. This is what my bias is telling me. This is what your bias is telling you because everyone has the same bias currently because it's unarguably bullish. So why we would just wait for short trades when every single sign is telling us that this supply zone has a higher chance to be broken than to hold price? I believe if this supply zone, okay, this puts a new perspective on the table for us. So if this supply zone will be broken, there will be a continuation scenario. So if price flips this supply zone, taps the supply, creates a reaction, flips it, then there will be a new demand zone, and we'll be able to execute new trades on this demand zone. This will be a new perspective, of course, and we'll be able to aim for this liquidity line. This will be my final target. So yeah, this liquidity line will be my final target, liquidity to take as a target point. I will aim for this liquidity line no matter what. I will aim it. And for example, if I open a trade somewhere around here with 2 pip stop loss, this line will be 25 risk reward ratio away, which is pretty fucking good. It's pretty fucking good, right? This is the bias trading. This is how you can trade the bias. This is how you can trade with a higher time frame order flow, because you know every single time frame has been confirmed. You can simply just aim for the big risk reward ratio trades in this case. Of course, it's not a counter trend trade. It's a fucking pro trend trade. Every fucking time frame is bullish. Sorry for swearing again, but I just want to make my point clear. Every time frame is bullish. Why would you just aim for 1 to 5 risk reward ratio when there's a pretty fucking high chance that price will sweep this liquidity? Of course, there's a chance that it will sweep you out in break even too, for example, but there's a higher chance that it will hit your target point than hitting your stop loss or break even. So yeah, once again, that's all about the analysis. I believe it was pretty clear. That's it, guys. Let me hear your questions. If you got any questions, just ask it, please. Marcel, it's a good plan to mark 4 hour 15 5 minutes, and yeah, that's what I'm doing. As you can see, that's what I'm exactly doing. I'm just marking out the 4 hour 15 5 minute zones and waiting for 1 minute confirmations inside of these zones. That's what I'm exactly doing. Let me just switch to the 1 minute chart. Okay, never mind. Cheers, Marcel. Have a good week all. You too, brother. Thanks. I have to go. Have a nice week. You too, brother. Thank you, Marcel. It was really good session. Guys, please, I will ask for feedback again, as usual, in the Discord channel. If you have something to say, just some positive feedback, some negative feedback, anything, just some building feedback, which will help me to actually refine these sessions and make it better. Just don't keep them in yourselves. Just write the feedback down there, please. I will really appreciate it. And if there's no other questions, I believe I will end this session, because yeah, it was clear. I just show you what you can expect. I will just start the recording.